Good morning, ladies and gentlemen, and welcome to this morning live trading webinar. For those who join us for first time, my name is Theo, and I'm the one who is keeping you company for these 30 minutes and going through the market events. So I hope everyone has a great week so far. To be honest, not that many trading opportunities. However, enough trading opportunities, I can say, to keep us busy in front of the screens. For those who don't know yet, we do weekly trading podcast. Every Monday, I upload the new episode. I talk about the news in the market, the upcoming news, so you are aware on a weekly basis what are the major news, if we have interest rate decisions to be announced, if we have some unemployment rate that brings volatility in the market. So you know, if you're trading intraday, that maybe at that time I have to just stay a little bit on the outside and not be rushed. I'm sure you understand. So, and where to find the trading podcast? Let me just show you right now. Here on the link, I'll share it with you. You just go on our admiralsmarket.com website. You click here where it says analytics, weekly trading podcast, and it's going to bring you here. You can also share it. You can download it on your device. Then let's go back to the PowerPoint. If you haven't downloaded the Admirals mobile application, please make so you can monitor your account. Also, if you are an investor with us at Admirals, you can also find it simple to buy shares using the application instead of the MetaTrader. Good morning, everyone, guys. Really welcome. And also, of course, the disclaimer, just to understand that all CFD products, they involve risk. And here, this content is for general information only, and it's not intended to provide trading or investment advice or personal recommendations. Let's go quickly to our page here, guys, just to make sure, if you haven't followed us on Instagram yet, please do it so you can receive all the notifications. Here we put so many reels, so many stories, content. It's a great tool to keep you updated. Also, please make sure you subscribe on the YouTube channel and click the bell button to receive all the notifications. We upload videos, everything has to do with trading. Really, it's going to help you a lot. Here at Trading Spotlight, you can find all the recording webinars, especially about trends. The one I'm saying, please make sure you watch them. Here is the link. I see few people like the video, but we have so many participants. I hope you don't get me wrong, guys. I really appreciate if you give us some likes on the videos on a daily basis, because really we put so much effort to bring this valuable content to you. These are your webinars. It's purely for your own benefit, and that's all. So the economic event for today, it was retail sales in the UK. The number went, they were focusing a bit more improvement, but it just snapped down into minus 1.4%. And sure, we're going to see some weakness coming in the Great British Pound. We're going to check the charts in a while. In regards to premium analytics, here at the morning briefing, Japan Finance Minister reiterates concerns over yen's rapid fall. UK government is high-profile casualty in world of higher borrowing cost. The Fed says inflation shoots up like rocket, comes down like a feather. Japan's consumer inflation remained at 3% in September. It's obvious that Japanese yen experienced so much weakness. We can see it also from the chart of the USD JPY. EU leaders push forward plans to tackle high gas prices. Ukrainians urged to ration electricity as Russian missiles target energy infrastructure. Snap stock falls as sales growth shrinks. Advertisers cut spending. Microsoft in advance talk to increase investment in OpenAI. Hello, guys. Hello, everyone. Oh, I see more likes. Hit it this live trading today. That's awesome. Thank you, guys. Just for those who haven't liked the video yet, please make sure you do it. I like really to see more of your engagement. As I said, these are your webinars, and your engagement, it's, for me, it's important here. All right. So as much as I want to help you, without giving me the authority and the access, I can not do such as much. Okay, so please make sure you engage with questions here. You ask. You are here to learn, improve your trading. Care wherever you are in trading. If you just started, if you are trading for 1 year, for 5 years, doesn't matter. So let's go to the indices. Let's start with the USD index. So aggressive. The US dollar is trying to push as much high as possible. We can see here yesterday a rejection came on the lower prices. Today, the US dollar, Liz, if you are here, hello. Yesterday, you were asking on the USD index why some people, they saw higher highs and they entered long. There are two different ways to see the higher highs. The first way, we see the market structure with the swings in the market, these higher highs here. So this is a swing that make higher high, but for traders, they look a little bit more into lower time frames, like 4-hour chart, 1-hour chart. Another important thing for them is to see the higher high of the previous candle. On the daily chart, if you see this higher high here and higher low, if you go to the 1-hour charts and 5-minute charts, you're going to see swings, higher highs and higher lows, because this candle here on a daily chart, it takes 24 candles of the 1-hour chart to be completed. So imagine this candle here just shows the volume and the trading activity better that took place in 24 candles in another time frame. So if you go to the 15-minute chart, you're going to see 24 times 4. You're going to see 92 candles, 94, 96, how many candles they are. Okay. 96 candles on the 15-minute charts to make one daily candle. So definitely you're going to see higher highs and higher lows. If people, they enter on a 4-hour chart, 1-hour charts, they can see swings, where we can see on a daily chart this high and this high. On the 15-minute charts, you're going to see more swings. So that's keep it in mind in your trading, guys, because this is a powerful way to read the daily chart without need to go to the lower time frame. Slowly you're gonna get there, but it's good to just mention it. All right. So we can still see a strong US dollar today. We're gonna see what it's gonna happen, if it's gonna break higher this area here. However, some of the I understand that Sherry. I was sure about that. That was good. That was good entry, no problem. And some of the euro against the USD, or pound against the USD, or Aussie against the USD, New Zealand against the USD, we can see some short, at least on the time frame horizon. Let's have a look at the DAX. gradually the market is pulling back. I kind of like this. So now, because we didn't see the reversal yesterday here, if we don't see reversal today, then we can draw our FIB from the low to the high. Here at this area, we can mark to keep an eye at this area here between 50% and 61.8%, the golden ratio of FIB retracement. And if the market stopped somewhere here, this high is still valid, and we can still see some good possible ways to the upside, but it's too early to think about that. For now, maybe today we're gonna, if we take the high of this bar here, it's bullish engulfing, and then we can still look to target the upside. FTSE just going sideways, especially with the uncertainty in the UK yesterday, today. Dow Jones still higher highs here. We cannot go to intraday and start buying because we don't have any confirmation on the daily chart. We just have the direction, but we don't have the price action. Nasdaq and the S&P 500, they are more weak than anything else. And I wouldn't, although I would prefer to sell Nasdaq and S&P, Dow Jones, it's in an uptrend. So as I said yesterday, I prefer to see more convergence between the three major indices in the US, and then I would like to sell. So let's read some questions. Happy Friday. Good morning. Hello, hello, hello. What about UK Prime Minister Liz resign? Pound and euro go down, but FTSE, yeah, FTSE not. That's true. Look, also you take in consideration the inflation in the country. They try to deal with the tax cut decisions they implement a while ago. Their retail sales, they just plumb lower and lower. So it looks so much weakness and uncertain within the UK. So Dorothy, it's everything affects here. Okay. So how do you know which currency pairs are strong and which currency pairs are weak? Raquel, and for everyone here, guys, how do we know which currency pairs are strong and which currency pairs are weak? First, we have the US dollar, that it's the major currency pair, and we have another 5, 6 currency pairs. We have the pound, we have the euro, we have the Australian dollar, we have the New Zealand dollar, we have the Canadian dollar, we have the Swiss franc, and we have the Japanese yen. Now, first thing I do, as you understand, we observe what happened with the US dollar index. If we see an uptrend in the US dollar index, because it's a leading currency for now, and we see strong price action in the US dollar index with an uptrend, we expect to see the USD against the pound to be on the downside, sorry, to be on the upside, the USD against the euro on the upside, or on your MT5, you have pound, the pound is first and the USD is second. So pound against the US dollar to the downside, because in currency pairs, guys, you have to understand this. In the currency pairs, when we sell the first one, automatically means we buy the second one, and vice versa. If we say we are bullish on the pound USD, it means we see buying activity, bullishness on the pound, and we see weakness on the US dollar. So that's how we determine a weak and a strong currency pair. For now, we see that in general, US dollar is strong. So the pair pound US dollar, it's going to show weakness because we refer to the first currency that it's the weak currency, and the second that it's the strong currency. If we say there is weakness in the euro US dollar, it means euro is the first currency, it's the weak, and US dollar, it's strong. Always they go in pairs. That's why when we mention about strength or weakness to the one with the other, we mean if the one is weak, the other has to be strong. So, and by going through pairs, if I go to the chart and I see pound against the US dollar is down, so pound is weak, US dollar is up. All right, guys, do you understand this? Then if I go to the pound against the Australian dollar and I see pound is down, Australian dollar is up. I see that pound against the Australian dollar, it's more bearish. So again, weakness in the pound. If I see the chart of pound against the New Zealand and it looks bearish, that pound is weak and New Zealand is stronger, it means it's something in general, weakness within the currency of the Great British Pound. That's how I read the currency pairs to understand which one is the strongest, which one is the weakest. And then if I want to take trades with the momentum trading, I just used the strength and weakness of the currencies to do so. Is it understood by everyone, Raquel? Because you asked this many times, and apologies due to time pressure. The time you asked, it wasn't, I wasn't able to dedicate that time to explain it. So I hope now it's crystal clear. And let's move on. Is it a double bottom on the DAX daily with beginning of a confirmation? No, it's not a double bottom. This is not a double bottom. A double bottom has to come and create a double bottom here. Okay, so it has to give the move all the way down. Thanks, Crystal. Appreciate it. USDX moving in opposite direction, comparing in other indices. Absolutely right. DAX, Dow Jones, stochastic. Yes, most of the time, yes. With the DAX, not that relation, not that much relation. We can compare the euro with the DAX mostly, but Dow Jones, yes, and the US indices. So let's go to the pound against the US dollar. So what we talked about, strength and weakness, here it is. So the pound, here it's our resistance. So we saw that the US dollar index, it shows mainly uptrend. The pound, it shows mainly downtrend. So you can understand that there is weakness in the pound. But if there is weakness in the pound, by default means there is strength in the US dollar. When we look at this currency pair, we look at the pound against the US dollar. We compare two currencies. So when we say there is weakness in the pound, it means the opposite currency, it shows strength most of the time, 90% of the times. There are times that we have two strong currency pairs, and if we put them together, they are just moving sideways. So, but in this occasion, we see that pound is just moving to the downside. Now, yesterday we saw that buyers, they tried to push and create some highs, let's say, to make higher highs here, but they couldn't make it so, and we saw this rejection here. Really, today we expect, compared with the fundamentals, we expect as well to see weakness in the Great British Pound. So if that's so, and we want to do intraday trading, we go, let's say, to our 5-minute charts, and we're trying to see, you see these nice swings, lower highs and lower lows. Again, probability trade. And we lower low here, lower high there. We can sell shorts and wait for our result. Let's move on. Euro against the US dollar. Excuse me, guys, exactly the same scenario. We have the the weakness in the euro. Again, if we go to the lower time frames, we can see some lower highs, lower lows. We can sell it, and it looks like they are good trades to me. USD CHF, gradually we are trying to break through this resistance. If we do so, then there is more room to target these high points here, where it was the last reference in the price. Too early to go there for now, but let's wait for the price to clear all this mess up there, these high points here. If we close higher than this line I draw, we are good to go to start looking for longs again on the lower time frame. If you are on a daily trader and you enter here or there, wherever, it's fine. You can keep your positions, in my opinion, although you should take some profit by now. Aussie against the US dollar, although yesterday came with some bullishness. We saw this candle here or later after the US session got rejected. The buyers got rejected by sellers, and maybe we can see some weakness in the Australian dollar as well. But if you can understand this candle here yesterday, the Australian dollar took the low of the previous candle, then took the high, it closed somewhere here. But the pound and the euro, they didn't took the high of the previous candle. The buyers didn't show significant strength compared to the Australian dollar. And how do we know that? Because we just observe the candles. We see what's happened within the candle. So if I compare the Australian dollar and the euro and the pound with the US dollar, it shows from the charts and the candlestick patterns that the Australian dollar in general was more strong against the US dollar than the euro and the pound against the US dollar, because, as we said, the euro and the pound didn't manage to leave the sellers didn't allow the buyers to create a new high because they reject their buying activities. And we see just rejection came somewhere here. So that's good. And you see, again, we say there are two ways to sell on the intraday. Either you can draw, let's say, your fib level and you find your 61.8% and you put a sell limit order so the price can get you fill when the market touches the 61.8, and then you can let your trade hit a target, let's say here, or if you want to be more aggressive, you can just wait for a bit more. And the stops can go either above the 78.6 or above the last swing, depends how aggressive or consecutive you want to be. So I gave you a crystal clear trading strategy on the intraday. And if I repeat it a few more times, I'm sure everyone will get it here. Okay. So that's how I play the intraday. That's how I trade on the intraday. And the reason I do this either a bit more tight stop or at the stop up to here depends on the length of the swing. For example, if I was entering there and I put my stop here, it's about 12 pips. Until the target, it's about 20 pips. So it's almost 2-to-1. If I want to be more aggressive and I enter here and I put my stop there, it's about 6 pips. By now, it's 1-to-1. Okay, by the time it's going to come here, it's going to be 3-to-1. Now, you have to be prepared if you're going to do this strategy here that you're going to lose more than what you're going to win. But when you're going to win about 2.5 to 3 times. So you have more room for error. You can be wrong about 70% and be wrong and be right only 30% and still be at break even. Okay, so and if you want to try any one of these two strategies, just make sure you use demo account first, so you don't mess with your accounts, your live trading accounts, if you are using real money by now. And please keep your risk accordingly. What about breakout trading, Theo? Liz, we're going to talk about breakout in another time as well. Do you find a good breakout? I'm not a breakout trader because most of the breakouts in currencies based on my back testing, they end up as a fake out. So I prefer to, for example, I never tend to do a breakout here on the support. Never. I'm going to do breakout only if I have a potential bullish engulfing in an uptrend or a potential bearish engulfing in a downtrend on the daily chart. And I'm going to just take candle by candle to do the breakout. When the market, like here, it took the low, I could enter short. That's the only way I do it. Based on my back test, the breakout, most of them, they end up as a fake out. So USD Canadian dollar, some strength also in the Canadian dollar. We see that the market didn't allow the US dollar to push to the upside. It's still sideways for me, so no intraday here. USD yen, my goodness, what's happening with this one? Guys, if you notice, there are so many spikes here, and Darshan yesterday spot them really well, like this one here on the 5-minute chart, this one here, and we had another one, I think so. Yeah, this one here, this one. If you're gonna still trading with the Japanese yen and the Australian dollar, please make sure your risk it's at minimum. Really, it doesn't worth 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. It's the 13th day in a row without any retracement, so it's a bit nasty, that one. Bullish engulfing yesterday on the JBP against the Japanese yen, although the Japanese yen is so weak, so weak. Pound, it's also weak. That's what we understand from the US dollar. So if we put two weak currencies together, we're going to end up going just sideways. So better for here, nothing again. We are in the middle of no man's land. We have a bullish engulfing here, but really it's nothing shows us to push to the upside. The euro also, it's a bit strong in general. So we can see what's happening there. Euro against the Australian dollar. Sellers 1, 2, 3, 4. After 4 days in a row, they didn't manage to show significant. To me, it shows weakness in the market. So I'm still bullish, and I still expected the market to push to the upside. Australian dollar against the Canadian dollar. I'm all in shorts here. I'm still waiting for this weekly candle to push to the downside as well. Euro against the pound, a bit mess. It looks like we have a new low here, a new low there. Where this is going to stop, unless I see a price action reversal, I don't tend to risk anything on this trade. Actually, the clearest, as yesterday, the day before, we said it was the gold with the strong downtrend, with the price action, strong price action, bearish closing candles. So, and today intraday, it's until we're gonna reach this level here, it's still the gold. I hope if you are intraday trader, you found really good opportunities in the gold the last few weeks. Crude oil, yesterday I thought we're gonna see push to the upside. This candle here shows that buyers were unable to push it, though. This is a nice candle for sales. But if we're going to take this trade, we have to be really careful with risk management and all this stuff, okay? And because we are in the middle of the move, we don't come from a strong resistance. It's good to, if we're going to take this trade, to use very minimal risk, okay? And I hope you don't get caught by emotions and risk too much on your trades. Just understand where are you in the trend and be patient, okay? USD euro against the Swiss, we said yesterday that we have room to move until this resistance for intraday traders, especially those who are in the Europe. So you have the opportunity to get something out of here yesterday. No, there was nothing here. The market was just moving sideways, didn't give us the opportunity. Today, very early, we had this higher high. You can see it here, pushback. And now we see what it's going to happen. So far, we don't enter on this is a breakout trade for Liz. You asked about breakout. That's a breakout trade. If you enter here, where you're going to put your stop. Your stop, you're going to put it maybe somewhere there, and then your target is somewhere here. For intraday trading, it's not the right momentum, in my opinion. Okay, and based on my experience, so I will be careful to take these breakout trades here. But if that's your strategy and if that's you feel confident to do it, so by all means. Okay, guys, let me read if other questions came. Hello, good morning, everyone. Good morning. Thanks, but we'll revisit to better understand what you've said. Yes, Rahel, please do so. And Rahel, I think the point for you is to understand that when we talk about currency pairs, we always talk about comparison of pairs. So if we say about euro US dollar, we use one word and we say uptrend, downtrend, or strength, weakness. Let's say we say weakness in one word, but it has an explanation of involving two currency pairs. This means first that the euro is weak, and it means second that the USD is strong. So when we say euro USD weakness, we mean the euro is weak and the USD is strong. I think, guys, for those who have a bit hard time to understand when we say about strength and weakness, I think if you learn this and you understand that we always compare two currencies, it will be fantastic in your trading. So someone took the trade here. Let me just have a look on the 5 minute. Fantastic. Well done, HB. Look at that pound USD 5 minute. Nice profit. Thanks, Theo. Perfect. So that's how we trade intraday, guys. We find a nice structure. Do you see? I will leave you with this one, okay? You see this market here. We are on a 5 minute chart. How clear is the image in front of us? We see a market that starts from the left to the right, and we see the price is just going downwards. Okay, so we see, if we see the nice swings, we identify direction on the daily chart is down. We identify the trend, the price action on the daily chart, it's bearish, so it can push the downside. And we go to the 5 minute chart and we see trend, lower lows, lower highs. So we can just enter a nice trade short. We take our profit at the last swing low, and that's it, it's done. Maybe we wait for hours and hours just to take one little trade that it's going to play out in 15 minutes, in 10 minutes, but that's it. Doesn't mean because we are in front of the screen 2 hours, we have to do something complicated. Understand this. This is where many traders, they lost it. Okay. It doesn't mean because we are monitoring and analyzing a chart to enter, because we're going to stay there for maybe 1 hour or 2 hours, we don't have to make trading complicated. We see the entry, we take it, the profit, the stop loss, we put it, profit target, and that's it. Now back to breakout trading, the last one. Liz, you see, if you enter here short breakout trading, and let's say you have your stop here, it means, I want you to see how the market moves. It means that you are without the momentum of the trade, because this swing trading, it's over now. We're gonna intend to enter short again if the market now it's gonna make a new lower low. If the market is not gonna make a new lower low, then we're not gonna enter. Okay, guys, I hope everyone had a fantastic trading session today. I hope you gained a lot of value. You understand many things that maybe you had questions. I'm really happy to answer all your questions, and I'm very excited when I see you asking questions. Okay, so I wish you to have a happy trading ahead, but be careful with your risk management. It's the last day of the week, so maybe some volatility. It's going to come to the market around the New York session. So let's just be mindful. Okay. Thank you so much. Already up $75 on the Euro CHF. Fantastic, fantastic. Great. Well done. Well done to everyone. It was my pleasure to do these webinars with you guys. I encourage you to join wherever you are free. Join, and you're going to learn more and more and more. And I'm sure in a few months' time, you're going to just see total, you're going to experience total different way in your trading. All righty. Have a great day ahead. Have a lovely weekend. And I will see you again on Monday at the same time. Thank you so much. Bye-bye.